A major shift just hit the U.S. economy, and few are prepared. The Federal Reserve is defying mounting pressure from both inside the government and the people suffering on the ground. While Americans drown in rising interest rates, inflation fueled by tariffs continues to push essential goods further out of reach. And in the middle of this economic storm, a powerful new bill has been signed that could rescue millions, especially the most vulnerable among us. Let's start with the Federal Reserve. While many hoped for relief, the Fed refused to cut interest rates, and worse, hinted that a rate hike may still be on the horizon. Despite months of warnings, record-high credit card debt, and collapsing affordability across sectors, the Fed's decision sent a clear message: they are not ready to change course. The base interest rate remains frozen between 4.25% and 4.5%, but the divide inside the Fed is growing. For the first time in over 3 decades, 2 board members dissented, openly pushing for a rate cut. Even that rare rebellion wasn't enough to sway Fed Chair Jerome Powell, who cited inflation from ongoing tariffs as a growing concern. Tariffs that were supposed to be temporary are now becoming permanent price inflators. Retailers may still be selling old inventory, but the new costs are already creeping in. Powell admitted inflation could spike significantly if tariffs persist, and with new tariffs still being introduced, that risk is growing, not shrinking. Meanwhile, households across America are suffocating under interest rates that punish the everyday person. Credit card APRs now top 30% for many, mortgage rates are back near 7%, and the cost of personal loans, car loans, and small business credit has skyrocketed. Even the U.S. government is nearing $1 trillion a year in interest payments alone on its ballooning debt. Yet the Fed remains frozen, and while investors and citizens alike beg for relief, Powell's justification for holding rates steady is chilling. This is pragmatism. Pragmatism, in this case, that leaves working Americans buried under impossible debt while inflation quietly steals their savings. Amid this financial gridlock, something did break through. A rare act of bipartisan action has delivered new hope to millions of veterans at risk of losing their homes. A new law, the VA Home Loan Program Reform Act, has officially been signed. It empowers the Department of Veterans Affairs to intervene directly, making payments on behalf of veterans to prevent foreclosures. An estimated 61,000 veterans who face the nightmare of eviction may now find safety. This law also establishes a 5-year PROCO claim program that could protect up to 3.7 million veterans. Fully funded, with no new debt added, the bill passed unanimously through both chambers of Congress, an almost unheard-of feat in today's political climate. In addition to protecting homes, new VA centers are being opened, including one in New Hampshire, the only state that previously lacked a full-service VA facility. And in Los Angeles, a new center aims to house up to 6,000 homeless veterans. But while this law is a lifeline, it's also a reminder. It took years of suffering to get here, and it highlights a brutal truth. Veterans were sleeping on sidewalks, while non-citizens were placed in hotels. That injustice should never have been allowed in the first place. It is not compassion to ignore those who served when they need help the most. Beyond domestic policy, another storm brews on the international front: rare earth minerals. The U.S. is critically dependent on China for materials essential to everything from electric vehicles to national defense. Right now, China controls the refining and manufacturing of rare earth magnets, holding the U.S. hostage in a quiet economic war. Only 16% of global rare earth mining happens on American soil. Worse, 0% of refining and magnet manufacturing. That's zero. The U.S. cannot afford this vulnerability. But one company is stepping up. USA Rare Earth Inc. is developing a fully domestic supply chain: mining, refining, metal production, and magnet manufacturing. With operations in Texas, Oklahoma, and Colorado, this company is building the first integrated rare earth project of its kind in the nation. The market for rare earth magnets is worth over $19 billion and climbing. In just 1 month, USA rare earth stocks surged over 32%, fueled by rising demand and growing urgency to end American dependence on hostile foreign suppliers. And this is only the beginning. Rare earths aren't just about profit. They're the backbone of future wars, energy independence, and global power shifts. Whoever controls them controls the future. And right now, America is racing against the clock. Meanwhile, a major warning has been issued. Mortgage rates are not behaving as predicted. After a single rate cut from the Fed in early 2024, expectations were that mortgage rates would fall below 6%. Instead, they've climbed back towards 7%, frustrating home buyers and economists alike. Inflation hasn't vanished. Volatile markets, slow GDP growth, and the persistent tariff wars have all kept borrowing costs elevated. Fannie Mae has revised its forecast for 2025 and 2026. A more optimistic outlook could reignite demand. But that comes with a double-edged sword. If buyers flood the market before supply can catch up, home prices could spike even higher. That means, even with lower rates, affordability may not improve. It might get worse. The housing market now stands at a crossroads. In some areas, sales are red hot. Homes vanish within days. But in others, the weight of uncertainty keeps both buyers and sellers frozen in place. If interest rates fall and inventory shrinks, prices may explode. If rates stay high, demand may wither. There is no easy way out. The American economy is locked in a high-stakes battle between inflation and relief, between rising prices and frozen policy. The Fed won't move. Interest rates remain punishing. Yet, behind the scenes, critical laws are being passed, new industries are forming, and the tug-of-war between Main Street and Washington intensifies. So ask yourself, if inflation rises again and the Fed refuses to act, who will pay the price? Wall Street or the American people? If you're tired of surface-level news and want clarity, grounded in facts, patterns, and power plays, this is the place to be. Add your voice below. What do you think the Fed's next move should be? Is this new Veterans Bill a step forward, or too little too late? And are we truly prepared to cut the cord on China's rare earth monopoly? Subscribe now to stay ahead of the curve. These stories aren't going away, and neither is the impact on your future. The consequences are unfolding, one decision at a time. The next move could change everything. The question is, who's really in control?